to this week's Fireside Chat with Jesse. I am joined today by Steve Orenstein, Executive Vice President at Prime Equipment Finance. Thanks for joining me, Steve.
My pleasure, Jesse.
It's great to have you on the program, sir. I know our path probably goes back about 10, 15 years. And, when I saw you resurface, I know you were still in the industry doing some consulting work, but when I saw your press release that you were at Prime, or I think a press release or LinkedIn post, I'm like, got to catch up with Steve. And fortunate enough to see you last week at Funding Conference, and glad to have you on the program, man.
My pleasure. I enjoyed working with you years ago and look forward to working with you in the future.
Perfect, sir. So for those individuals who haven't had the pleasure of meeting you yet, Steve, do you mind just kind of introducing yourself and career to date in equipment finance?
Sure, I'd be happy to. I'm one of the older guys in the industry in that, I've survived a variety of acquisitions, mergers, and then further mergers and further acquisitions, like many of the older guys in the industry. But it's the excitement I have for the industry today is not that much different than when I was first learning about equipment finance going back almost 40 years ago. And in my career, I've been fortunate in that I've worked with independents, both small and large commercial finance companies, as well as a couple of different bank equipment leasing platforms, which you're dealing with a variety of issues at the bank level. But at least knowing about it helps you find a way to circumvent and get business done, which is the name of the game for all of us in the industry.
Yes, sir. Yes, sir. So almost 40 years, like how'd you stumble upon, this industry? Kind of curious. I always ask the question how people got in.
Well, it's a good question. In my case, it may not be different than a lot of the people you speak to. I didn't seek equipment finance. Equipment finance found me. And when I came out of college, frustrated because I couldn't get into medical school, I went to work for a healthcare company. And that company sold supplies, equipment, practice management, office design, construction, cradle to the grave. And part of what we did was we helped the young professional finance it. And I had to go out and introduce myself to a variety of finance entities, banks, and equipment finance companies. And, after about 5 years of that, one of the finance companies that I had aligned myself with made me an offer I couldn't refuse. I was living in Chicago, working the Midwest region for the healthcare company. They offered to move me back to the East Coast. I'm originally from New York and in New York today. And I did that. It was small ticket healthcare financing. These were the days before a lot of computers in the industry. App only to us was the back of an index card where we would write down name, rank, serial number, bring it back to the office, and credit would run the various credit reports and tell us whether or not the professional scored. But it was a great learning environment. And one of the things I learned early on is you need to align yourself. And I know you'll ask this question at some point, so I'll volunteer it now, with mentors, people who can help teach you to get you to the next level. And I was very fortunate that the senior management team at that company took me under their wing. In fact, we had such a close relationship that when they left that company, they took me with them. And we formed what was back in the day a private label equipment finance program where we were doing vendor programs for a variety of companies, and we were their back office. But that's how I cut my teeth in the industry. I spent 20 years on that side of it, that being independence, commercial finance. I learned a lot in a very short period of time. And then the last independent I was with back in the day got acquired by a bank. And that started a 22-year run with two different banks.
So how was, I know I'm going to bounce all over the board here compared to some of the questions I kind of laid out here. So how was that acquisition, and then I guess going from an independent to a bank, 22 years ago, well, 22-year-old run, when that happened, I guess I should say. What was that like, Steve? Because I mean, that's you see a lot of independents that today, and it's almost like, what's your end game? And a lot of the end game is to be sold to a bank.
Yes, and I can appreciate that. This acquisition took place in '93. Um,
Uh,
Not to say that banks weren't heavily regulated back then, but it was different then than it is now. A better example I can give you is uh, that bank, which was Sterling National Bank and was acquired and no longer exists by name. When I left Sterling after a 20-year run there and went to Hudson Valley where we teamed up, um, I was visited by the OCC 3 times in 90 days when I cranked up Hudson Valley because they were nervous. We didn't know what we were doing. We didn't know how to do it. We didn't have policy and procedure in place. The last visit I had from them, we had just booked our first deal in the 91st day of existence. And they actually asked me, how's it performing? I said, we haven't billed them the first payment yet, but I'll let you know as soon as it happens. But
asking in like
I
9 months, dude.
I wanted to draw that distinction because that kind of gives you a flavor for how far the regulations went from the time I entered the bank space till my last tenure in the bank space. But it was a great run. Yes, there are a lot of rules and regs and audits and OCC visits, but I began to learn a much bigger picture approach to budgeting, forecasting, running direct salespeople, going out and buying wholesale opportunities. So it was a great training ground, and I really enjoyed my time with that bank, as well as took best practices and took it to the next bank I was with. Unfortunately, we had a short run in Hudson Valley because they got acquired by Sterling National Bank. And it's true, you can't go home again. So that's a little bit about my past history. Once I left Hudson Valley, I had an opportunity to catch my breath. I had an opportunity to work in a non-regulated environment. So I did some consulting. And as we were moving into COVID, I had to kind of switch the model from consulting to more of pool sales because you get a bigger bang on a buck for the pool sales and the amount of time you're putting in is almost equal to a consulting assignment or trying to do a large block of smaller deals. So that's where I spent most of my time recently. And then at the end of last year, I teamed up with Prime, basically a startup in the small ticket space. The unique thing about Prime is we are a bank affiliated company, which means that we're not a sub, we're not a division, so we don't have we're not subject to all the bank regulations, but we enjoy a constant and committed funding source, as well as some, administrative assistance through IT, through HR, so we don't have to duplicate those costs down at the equipment finance level. And we're focusing in the small ticket space, typically $500,000 and below, 250 and below, credit scored approach. If the deal doesn't score, we put eyes on the deal. We take a look if the deal has legs, and if so, we find ways to get the deal done. We're working with a variety of partners in the marketplace as well as vendors. So again, quick synopsis, what I've been up to, what I've been doing, and how I got to where I am today.
No, I appreciate the candor and everything.
Sure.
Learning more about that, just like the whole going from a bank and then being a consultant, it's kind of like, okay, now you dictate what you do, who you choose to work with on your terms.
Well, and also the company I was working with, if they hadn't been in a bank environment, at least I could preview it for them so that it was eyes wide open. Because as you and I discussed, independents think being part of a bank is a panacea. Well, there's good news and there's bad news. You have unlimited funding capability in most bank environments, but it comes with a cost. They're going to be looking over your shoulder one way or another. So you can't do what you've always done the same way.
So do you want to go out and get a couple more basis points, or do you want to be subject to more regulation?
Yeah, exactly. But at least you know what you're going to be confronted with. So it's the old saying, an educated consumer is our best customer.
Sure. So thanks for introducing Prime. Are there any specific asset classes you guys like to play in? Or are you more agnostic?
Well, again, I want to stress that Prime is a young company, so that we're feeling our way through the different verticals that we want to play in. Prime, and all of us at Prime are industry veterans. There's no newbies here. So we bring to Prime, aside from our expertise and industry experience, but selective vendors, customers, verticals that we have day-to-day experience in. So Prime is probably 50% healthcare right now, and the other 50% is transportation, manufacturing, construction, um, specialty truck and trailer for the moment. I'm sure over time that's going to evolve and change somewhat as we go to market and look for newer opportunities.
Sure. Sure. Thank you for that. And I know you mentioned some vendor indirect. You guys have some direct stuff too at this point in
Yes.
time.
Yeah,
Okay.
we
So
haven't
basically,
hired a direct sales force. We're putting the majority of our effort into capital markets, but the guys at Prime, guys and gals at Prime, do have, clientele that they dealt with in the past. So we're doing organic or retail deals as well. And probably next year, this time, we're going to field a sales force of our own originators so that we can begin to shift the balance between wholesale and retail in portfolio. It's probably going to be 80-20 this year, wholesale to retail. Next year, it'll shift. Maybe it's 70-30 wholesale retail. And then by year 3, we get it closer to 50-50.
and how many employees do you guys have today?
6.
6. And are you
Yep.
in New York?
No, 6. The brick and mortar office will be in New York City. I haven't found the space yet, but company wide right now we're at 6 people for the simple reason everybody's remote, everybody's tied in through our shared drive. The credit product we're using, anybody can go into and enter the basic information. So the need for a lot of staff is minimized. We keep those costs down. As we move into more traditional lower middle market lending, i.e. $500,000 to say 5 million, we're going to need a more robust credit staff, as well as people who can do portfolio administration, documentation, billing and collection. Right now, we're outsourcing a lot of those services.
Yeah, no, I mean, when we were talking about this over the last couple of weeks, it's the crawl, walk, run, and industry veterans. You guys have been through this before, so it's as opposed to going out and making a huge capital investment in systems and people and everything. It's like let's scale this, methodically, and I think the outsourcing that you guys are doing today it's perfect, right? Until you need to come to some quantity where it justifies.
It's dramatically different than it was 7-8 years ago, because the kind of third-party servicing capability today far exceeds what was available back in the day. When I did Hudson Valley, the reason we initially teamed up is I needed a backbone. I needed a computer system. The back end was easy because we knew we needed portfolio management, billing, and collection. The front end was a struggle because we didn't know what we needed on the front end from a credit standpoint, because everybody was used to, okay, if we're going to put it in the system, write it. Once it's in it, you're done. It'll just workflow its way through to the back end. But today you can achieve the same goal by outsourcing portfolio management, outsourcing billing and collection, outsourcing document preparation. So you don't have to have that head count day one. Now, no different than back in the day, there's going to come a point where the economies of scale, what it costs per account to get it on the system, to bill and collect it going forward. Once you reach a certain density in portfolio and volume of contracts, as you well know, Jesse, it kind of makes sense to bring in a person who can portfolio manage, who can document, who can post to the system, who can oversee billing and collection. But that's a ways down the road for us.
Yeah, and that's not a bad problem to have when you get to that
exactly.
thing.
Exactly.
It's interesting though, is I look at some of those top independents that just came out, and there's a handful of them that still outsource because they just don't want to mess with it. They're just like, you know what? it's not broken, why fix it? We'll pay a little bit more, but um, I kind of see both sides of it.
Sure. Sure. And it's a fine line. At what point do you make the decision to keep outsourcing it or bringing it in-house? We got time to have that discussion. And, when the time comes, we'll
Yeah,
have to make a
yeah.
decision.
Like I said, that's a good problem to have, right?
Yeah, exactly.
Um, so as you guys shift to kind of brick and mortar over time, um, like, do you guys have a game plan for growing the organization? Are we looking to, I guess, how are you going to be bringing on some new talent? Like, are you looking to dip into the people coming right out of college, or will you focus more on the industry veterans per se?
I think the trade-off with young talent is you can't get the job done just with one young talent or novice. You probably need to hire a few. So now you're doubling up on the expense. In our situation, we'd probably go with industry people we've worked with in the past, for argument's sake. We've already spoken to a credit team. They're currently employed in two different shops. We're not about to disrupt that, but we know there'll come a point in time where we'll need them and they're ready to make a move. One guy's in the industry, and they happen to be men. I don't want to sound sexist. One person is 10 years in the industry. This more senior person is 20 years in the industry. I think between the two of them, they can handle a wide range of credits and opportunities, and the system will help them keep up with volume.
Sure.
On the sales side, I've already reached out to people I've worked with previously over the past 20, 25 years, and I've got about a half a dozen that have expressed interest in joining us as employed salespeople. And what I'm doing between now and the date we employ them is I'm bringing them on as sales agents, difference being they're 1099 as an agent, but they get used to the system, they get used to the process, the flow, the turnaround time, and they get the benefit of probably discount or buy rates better than they normally would get as an independent. So it benefits both of us. But the short answer to the question is probably go with people we know in the industry as compared to bringing in younger talent. But having said that, as we grow the organization, maybe the second wave of sales hires would be younger people who can eventually take over from the older tenured
Sure.
people as we begin to retire from the industry. It's inevitable.
So,
it's not tomorrow, but it gives them an opportunity to work with quote unquote a mentor.
no, I mean, that's perfect, and especially like the 1099 approach to the sales agents, it's brilliant because it gets them, used to working with your team,
Right.
used to getting understanding of the culture, and then sometimes it's a good fit. Sometimes people are like, this isn't for me. No harm, no foul. Let's move on and go, whatever.
Yeah, but as in any sales organization, you're going to have, a third's probably your bigger production people. The middle third is kind of middle of the road carrying their weight. And then the bottom third, you're kind of looking to bring somebody stronger on. So it's probably not going to be too much different in our shop, other than the people we initially bring on. Most of them, are hitting on all 8 cylinders. They just have to get used to our approach, our credit philosophy, and the way we structure deals.
Perfect. Perfect. And I know you've touched on the mentorship a couple times now. And I know one of the questions was looking to ask where it's, younger people coming into the industry, what words of wisdom that you might be able to offer them in your 40-year career.
I think that the words of wisdom would be to absorb as much as they can from as many people in as short a period of time as they can. Now, that's simplistic, but if they join a growing organization or a relatively young organization, they should be able to spend some time with the credit people, learn their approach and how they do it, spend some time with the more seasoned salespeople, and learn what works for them and why it works, and what they are doing differently to get a higher look to book ratio in their book of business, and also understand operations a little bit. What happens to the deal after it gets booked? How do we post and collect? How do we report whether or not it's prompt pay or not? So they have a much broader understanding of the process that's supporting them. I didn't take advantage of that when I could. It took me time to find people who were willing to spend time and share that knowledge with me. So the quicker they can do that, the better off it's going to be for them professionally and coming through the learning curve.
Absolutely. Get used to every aspect of a business you can. I know starting off in collections doesn't sound sexy, but you truly understand the client's, concerns and everything else on that side of it, and credit. And yeah, just learning how the sausage is made.
Exactly. It only makes you better at what you're doing if you understand it. And a lot of young people don't want to take the time to do that. They're
No,
too, how can
and
I put it?
unfortunately, the training programs that you probably went through and that I was able to go through 20 years ago aren't there today.
Yeah, it's funny you mentioned that because there were a bunch of us at the funding expo last week lamenting that back in the day, people like US Leasing, Wells Fargo, Citicorp, Chase, to name a few,
GE,
had
yeah,
GE, Siemens, they all had training programs where you could learn a little bit about credit, you could learn a little bit about the accounting, you can learn a little bit of how to price deals, as well as some basic sales skills. It just doesn't exist at all today. And that's why I led with mentorship, because you can't. Yes, the ELFA has courses you can take. I encourage you to do that and
yeah,
get your certification, because it's something else in your tool belt of things you
yeah.
can use to make you better at your job.
Yeah, and I know Stripes has a leadership program where they bring in different people from all aspects of a business too. But I think the only organization that I've seen recently, and I don't even been a few years, is was Great America, which almost required you to kind of go around when you started, um, you know, just to learn every aspect of the business before you settled on one.
Yeah, no, it's like doing an internship in all the key
Yeah,
departments within the organization. I think that's a great way to at least get a broader brush view of how the business operates. You're absolutely right.
yeah. I'm gonna shift gears a little bit if you don't mind and kind of talk
Yeah.
about, the current state of kind of equipment finance. You know, where the economy's at, like just what are your thoughts based on what you see going on? I mean, last week at the funding conference, everything was upbeat. It wasn't like it was kind of 2 years ago, when all that stuff went down. And last year, I think was
Sure.
still a little bit more, cautious. This year seems cautiously optimistic, but just kind of wanted to get your thoughts. And then, for the people who are just getting into the industry or haven't been used to this kind of
Roller coaster.
even
Yeah.
even 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 a even a plane, because I mean since 2008 it's been on this trajectory, and over the last couple of years it's just been maybe a little stagnant, going up, maybe a little down. So just kind of wanted to get your thoughts on that, Steve.
Well, no, you definitely touched on a key historical trend, which is there are going to be peaks and valleys up and down in any industry, in any cycle. But from 08, 09 to great financial reset, if you will, till COVID, everybody was riding high. You couldn't make a bad loan, bad lease. Portfolios were growing, headcount was growing, and the COVID was like a bucket of water, and everybody had to hunker down and learn how to do business differently. And that gave birth to working remote, which is still an issue today in many different industries. But at the same time, the current environment is one of optimism. Whether I don't want to talk politics, but whether you love them or hate them, the current administration is similar to what was happening in our industry. There was a disruption, and that's exactly what's going on. They're trying to turn things upside down, look at it inside, outside, 6 ways to Sunday, to see if how it can be improved and make things better. I don't think the country has ever operated similarly to a big corporation, but that's basically what it is. And I think the current administration is taking that approach to it. Let's cut out the fat. Let's trim down to a manageable number of people. Let's make sure we're firing on 6 cylinders, let alone 7 or 8. And little by little, we're going to build up momentum and steam. And I think once we get through the trade issues going on right now, and we kind of level the playing field for the country. I think the next focus is going to be interest rate reduction to get the fire turning again, the combustion engine burning again, if you will, in the economy. So I think it's a very exciting time to be in the industry. I think for all the disruption and maybe people moving slower than we'd like them to move, it's going to pick up momentum in the next 6 to 18 months. So it's a good time to look at the industry.
If we're looking to bring everything back, you know, manufacturing, infrastructure, building up, all that stuff there. I mean,
yeah,
like you said, lower the interest rates, make it more appealing, and let's rock and roll.
yeah, and I think that's part of the reason the banks, as they would traditionally, take a back seat until things settle down, you know, and then they're going to say, oh, what a great idea. We should expand our equipment finance capability. We should look to increase the size of our portfolio. Meanwhile, those of us who are in the non-bank environment are making hay while the sun shines and trying to take advantage of different markets that we can get into, which had been previously closed out because the banks were so deeply entrenched.
Absolutely. And no, I don't need to bring on this, you know, $3 million lease if I get a $3 million deposit.
Right. Well, why take the credit risk? Take that deposit. I'd rather earn next to Bupkis, but it's a safe investment.
I guess going to shift gears again, if you don't mind,
sure.
sir. You know, you mentioned earlier, you know, you're working with a veteran team. You know, you have some other people you're eyeing. Obviously, you've worked with them in the past. You have a relationship. One of the things I like to focus on too about this equipment finance industry is the relationships that you've built over time and how they seem to stick with you throughout your career, and how important those relationships are.
Yeah, I can't stress how important they are, because for those of us who've been in the industry a while, your relationships tend to follow you where you go. You may not be able to onboard them day one, but there comes a point in time in the early going when you're in your new place of employment where you figure out a way to bring, you know, Acme Manufacturing into the fold, or do a deal for Acme Manufacturing, who you historically have done 2 or 3 deals every year with. You know, once you get a lay of the land and figure out how you can price it and make it fit the credit box, you're off to the races. But equally, if not of greater importance, are funding relationships, where you've worked with buy sell with other organizations throughout your career. The name of the company on your business card changes from time to time, but the individuals you've dealt with in the past are the same individuals you're dealing with today. I was talking to the president of Prime today, and he said, you guys are off to the races. You know, I said, you need to slow it down, let us catch up. And I'm saying, but these are people historically, you know, we told them we were going to be in Chicago. We got together in Chicago last week, and now they're ready to send opportunities or pools or portfolios.
Hey.
And, you know, I can't hold them in place. I can say we're not quite ready, but that goes so far. But that's exactly an example of the relationships you're talking about. No question.
No, it's one of the things that's kept me in here for 20 years, and I'm sure it's one of the reasons why you've stayed in here for almost 40, sir.
Yeah, no, and just an example, I mean, we were brand new as an exhibitor at the Funding Expo last week, and about a week before the show, my 20-minute slots of appointments were filled for Wednesday, and I had a half a day scheduled for Thursday, and I was on the floor. We also had a hospitality suite, and they were equally as booked. And it's because, you know, we made some calls. We're going to be at the show. Let's get together. Let's set an appointment. And that was the net result. You know, the better result will be when we can do all the business we've just been talking about.
Fair. So I ask everyone who comes on the program, Steve, to give me a little fun fact about themselves. So what makes you tick outside of working in equipment finance? What hobbies do you got, man?
One of the things I found interesting, because when I left the bank and we were going into COVID, You know, a lot of us moved our principal place of business to our home office, if you will.
Sure.
And I had to learn how to discipline myself that instead of getting up, getting in the car, or getting on the bus, or getting on a train and going to the office, I got up, grabbed my cup of coffee, hit my desk, turned everything on, and showtime. You know, there was no ramp up. You just go to show. And part of that is I'm a dog person, so I'm trying to juggle my at-home work environment with a dog that's constantly coming in and telling me they want to do something. So what I've been doing with the last couple of pups I've had is we go out for trails. That I enjoy, and the dog obviously enjoys it, and it's a way of exercising. So that, hitting the gym, trying to work in a schedule at the gym, tinkering around the house, different, you know, do-it-yourself projects, you know, keeps me busy, and at the same time it gives me the exercise that I don't get sitting at the desk, typing on the keyboard, crunching numbers, looking at credits, and trying to move things through the pipeline.
Sure, sure. And I was gonna say, because what does that free up a couple hours potentially? I mean, the Northeast commute's never a fun one.
Yeah, it's you've got to plan. I got to plan my trips to the city because I want to do a lot of different things while I'm there. Unlike
Sure.
the years I spent with the banks, I was in Manhattan. I lived in Manhattan, and the house that I'm sitting in right now is the weekend place. So it's typically a subway ride away. You know, Upper East Side to Midtown,
that's not
Upper East
bad.
Side
That's
to
not
West Side.
bad.
Yeah. You know, so everybody else an hour and a half commute. You know, I got a 20-minute had a 20-minute subway ride, which
That's not bad at all.
today
I think of
is,
my friends like they're in Central Jersey and they take a freaking train to Manhattan every
yeah,
day. And
yeah.
you're just like, oh, what are you doing? Like, come on, man.
Well, they have to drive to the station, take the train. Then when they get into the city, probably jump
Port
on a
Authority,
bus
yeah,
or a
jump on the
subway to get to
Yeah,
the
yeah,
office. So by the time they get to the office, they're pretty spent.
yeah, yeah. Well, that's good. I mean, the challenge I have with my creatures in my house, and I'm not sure if you saw one, but a cat just
I
jumped
saw the
up here.
tail go earlier.
I'm like, get out of here. Like, it's like they always want attention. You're just like, not now.
Yeah.
I had one the other day jump up on my desk when I was giving like a presentation, and I'm like, I'm sorry. Like,
But
it is
the pet was trying to make a point for you. This is
Yeah, yeah.
important.
Yes. My last question I have for you, Steve, is why should someone want to do business with Steve Orenstein in Prime Equipment Finance?
Well, if we don't have a previous relationship and I'm starting from scratch, I have to be able to convince them that what I say and how I say we approach the business is actually how we do it. So it's my job to originate the business, shepherd the business through the system, help the salespeople do the same with their book of business, and deliver, even if we don't approve it, give a timely response, explain why we couldn't do it if it's a decline, give a timely response and approve the deal and move it through the system to documentation and ultimately to funding, because I believe that you're only as good as your word. And your word carries a lot in this industry, as it does in many other industries. But at this point in my career, what I say is hopefully what we can do and get it done that way. So I promise to be transparent, and I promise to get the best deals I can done in a timely manner and at a competitive price.
Awesome. Well, thanks for your time, sir. Congratulations again. We're joining a good organization. Excited to see, excited to just hear where you guys are at today and see the trajectory of your organization. Going to be fun for sure.
I appreciate your inviting me on. I've enjoyed it, and hopefully I can give you a progress report at some future day.
Sounds great, Steve. You have a good day, sir. Thank you very much for your time.
Thank you, Jesse. You do the same. Been a pleasure.
Thanks.